When it comes to investments, Latin America almost always goes completely unnoticed. People always talk about the United States, often Europe, and occasionally China or Japan, but Latin America? Almost never. In fact, I'd go as far as to say that in investment circles, you're more likely to hear about Mongolia than Latin America. Of course, this doesn't happen because there are no stock markets or listed companies. In fact, companies listed in these countries are often priced relatively cheaply. But naturally, this is no coincidence. There's a reason for it. This is probably the region with the least legal certainty in the world, except for Africa. What does that mean? Well, Latin America has swallowed more fortunes than a Las Vegas casino. Nationalizations, hyperinflations, capital controls, corruption, natural disasters, or the collapse of commodities. It doesn't matter the cause, the list is long. Latin America, and particularly South America, has always been a place of very high risk for investment. Latin Americans themselves are often the first to try to safeguard their money in other parts of the world, like Switzerland or the United States. But okay, this is a story we're all somewhat familiar with. But, what if I told you that there are investors and analysts who believe all of this has created a great opportunity? Could South America be a new place to try your luck? Are we standing before an engine about to rev up? Well, that's exactly what we're going to look at today. Hello to all the community of Finance for All, welcome to another video. In terms of economics, finance, and politics, Latin America, and especially South America, doesn't often bring much good news. However, against all odds, things could be looking better than usual right now. On the one hand, in Brazil, we have a more moderate and business-friendly Lula compared to his earlier terms. In Mexico, nearshoring is driving significant foreign investment. In Chile, the socialist revolution many feared hasn't materialized. We might be on the verge of a new commodity boom that could inject significant funds into the region. Or, let's not forget, there's the revolution Milei is leading in Argentina, which is fueling huge expectations. Do you want concrete proof? After the libertarians' arrival at the Casa Rosada, Argentine company stocks skyrocketed. Take, for example, what happened with YPF, the state-owned oil company listed on the stock exchange. Since Milei came to power, its share price in dollars has doubled, and this wasn't an isolated case. The Merval index of the Argentine stock market, measured in dollars, has surged by more than 60% since Milei's election. It's a clear sign of the growing confidence now surrounding Argentina. For all these reasons, with more than 400 million people and a per capita GDP of just over $8,000, South America, surprising as it may seem, has many strengths. There's a risk of viewing South America as a land of favelas, drug lords, and warlords. However, we often forget the other side, an emerging middle class, with a population that's increasingly educated, and abundant natural resources that could bring tons of money into the region in the coming years, especially if the much-anticipated new commodity boom arrives. Which, of course, would be pure fuel for the markets, companies, and local stock exchanges. In South America, we find vast deposits of copper, lithium, iron, manganese, niobium, gold, silver, and many other minerals. And also, increasing amounts of oil and natural gas. In fact, the region is experiencing a true oil boom. Guyana, Suriname, and Brazil are becoming key oil suppliers in the international market. Moreover, unlike Western countries, South American societies are generally much younger. In fact, it's the younger generations that are driving the rise of an entirely new sector. I'm talking, of course, about the digital world. Young South Americans are quickly adopting a much more digital approach to their lives and are launching online businesses. Mercado Libre, the Latin American Alibaba, is a good example. To sum up, Latin America is starting to perform much better in the new economy. In other words, the foundation and ingredients seem promising, but, of course, not all countries are the same. There are some automatic write-offs, like Venezuela, but there are also others that are looking much better. For example, in Chile, the richest country in the region, nearly all the fears triggered by the 2019 protests have dissipated. Gabriel Boric's government has been much more moderate than expected, the attempts to pass a new constitution have failed, and the social unrest has almost disappeared. In other words, the risk has plummeted, while a lot of money could flow into the country in the coming years thanks to copper, a commodity whose price is on the rise. This could also benefit Peru significantly. And let's not even talk about Guyana, which is on track to become the richest country in the entire continent, thanks to the massive oil reserves discovered in recent years, which are already starting to be explored. But if you agree, let's take a look at the largest powerhouse in the region. We are talking, of course, about Brazil. With over 200 million people, Brazil is home to nearly half of the entire population of South America. Plus, it's slightly wealthier than the regional average, which means it has a middle class with some purchasing power. Additionally, it's one of the few countries in the region with significant industrial activity. It's not the most competitive or efficient, but it's something. Brazil is a huge exporter of raw materials, food products, and, more recently, oil. Brazil is experiencing a real oil boom and has already become one of the world's largest producers. Its production is about to exceed 4 million barrels per day, which would surpass the United Arab Emirates and nearly match a country like Iraq. Moreover, its production is expected to continue growing in the coming years. Brazil could end up becoming the fourth largest oil producer in the world, behind only the United States, Saudi Arabia, and Russia. In addition, with domestic consumption at around 2.5 million barrels per day, Brazil is already earning a substantial amount of foreign currency thanks to the export of this black gold. On top of that, Brazil has another major advantage. It has a very low cost of electricity generation because most of its energy comes from hydroelectric power, one of the cheapest forms of production. In other words, with a moderate government, an emerging middle class, increasing oil revenues, and a potential new commodity boom on the horizon, Brazil could be in an optimal position for future investment. Yes, it's still a bureaucratic nightmare, but, as you can see, there are things improving in a framework where there are very cheap companies with high dividends, a place worth exploring. All in all, perhaps the most interesting and striking case is that of Colombia. Colombia is a country frequently known for two things: drug cartels and guerrillas, which, of course, don't exactly inspire confidence. To make matters worse, lately, it's also known for its president, Gustavo Petro, a man obsessed with dismantling the oil sector, which just so happens to be the country's main industry. Petro is a president who has generated a lot of fear among investors, which has had one advantage: Colombian stocks have been trading very cheaply lately. Let's put it politely, they're not in fashion, or at least they weren't, because so far this year, the Colombian stock market has skyrocketed. What's happening? Well, it turns out the wolf wasn't as fierce as it seemed. Gustavo Petro has recently been hit by scandals, his popularity has plummeted, and he has been unable to push many of his regulations through, mainly because he doesn't have a parliamentary majority, and few politicians want to side with an unpopular president. In recent months, his approval ratings have improved slightly, but only because he hasn't done much. The result is that many now see a big opportunity in Colombia. Petro might leave office without much impact, and meanwhile, Colombian companies are very cheap. In Colombia, we can find many companies trading at single-digit multiples with high dividend yields. Without a doubt, this could be a market worth watching in the coming years. The worse things seem, the greater the opportunities can be. This is particularly true in the oil sector. It's possible that the next government might reverse Petro's plans to dismantle this industry. If that happens, we could see significant revaluations. To sum up, as you can see, there is a growing investment trend that sees South America in a positive light. The question is, will this market finally become a source of good news? Let us know your thoughts in the comments, and if you found this video interesting, don't forget to give it a like.